Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Hopefully everybody had a fun Super Bowl weekend. But today we got the stock market back open. We're in rally mode. Dow's up about 300. Nasdaq's up about 200. Now what's my take on the market? Well, my take on the market is we're still going to go lower. Now we're in a topping out process. We hit that peak about a week ago and we came down, rose up, came down. Now we're rising back up again. I think that high is going to hold before we move lower. Now, if you look at the Dow's very interesting. It's been in this sideways pattern, just moving sideways, not moving up or down. This is building up energy for the next move, and I think the next move is going to be lower. Now, there's a lot of people that think we're in a new bull market. I don't see it that way. I suppose it's possible. If we spring load higher, I might change my opinion, but I think that recent high about a week ago is going to hold, and I think we might rally up to it in this topping out process, but I think we're going to come down lower. I don't think we'll get above 4,200 on the S&P. Now, the S&P does have support down about 39.50, so it may come down to that support, bounce up, and then head lower. My final destination, I think we're going to take out the October lows. I think we'll go down 3,400, 3,300 on the S&P. That's just my take. Now, tomorrow the CPI number comes out, right? Now, they're expecting it to be a headline number, 6.2%, down from 6.5%. So they're expecting it to continue this downward pattern. It may. I don't really know what that will be. But eventually, I know that number will reverse and we'll go back higher, and that's really going to put pressure on the market if that happens tomorrow. Well, that's my take on the stock market. Let's move over to the real estate market. Over the weekend, I always read the articles, and you gotta, I find them fascinating. Let's talk about this one. Okay, so Doug Duncan. Now, Doug Duncan, he's the chief economist for Fannie Mae. And he came out with the prediction for the housing market for the next 2 years. Over the next 2 years, he says that we're going to drop 6%. About 3% a year is what he's saying. 3% a year, 3% a year. Now that's fascinating to me, but okay, let's say he's right. Let's think about why he says this. What's his reasoning? Well, he thinks that incomes are going to strengthen, meaning you're going to get paid more. Now, he thinks there'll be an adjustment between incomes, mortgage rates, and home prices. Now, this will allow the consumers to get back into the marketplace. He thinks that houses will become affordable again. Well, let me ask you a question. How much would you think your income would have to rise in order to make houses affordable? Well, I think you'd probably have to double, right? Now, or how low would mortgage rates have to drop to make these houses affordable? I think they'd have to bring the Fed funds rate back down to zero. But I don't think that's going to happen. Now, home prices are not affordable right now, and there's going to be a reset. Now, I don't think the reset is going to be this 3% in the next year that he's talking about, or 6% for the next 2 years. I think the reset's going to be closer 40 or 50% down. Now, this reset, it's going to be painful. It's going to be painful for a lot of people. A lot of people are going to get hurt, and I do feel bad for them. My clients, I tell them, go, look it, don't buy a house right now unless you can handle the 50% drop. Now, if you're a younger person, you've never really seen a down market. Let's say you're under the age of 40. You've pretty much just seen houses going up and up and up. They don't come down, right? Well, they do come down. They came back down in 2007, right? They dropped, but you were very young at that age. You didn't really take notice of that. Well, that was a rare occurrence. That is true. Over time, houses tend to go up, but we've had this big explosion higher, and we're going to get this big explosion lower. It's going to follow. It's just when a bubble expands to a certain level, the bubble will pop, and the bigger the bubble, the bigger the drop will be. Now let's think about the seller's mentality right now. Okay, so when the houses were going up, the sellers No, his frame of mind is, Mike, why would I sell? Going to be worth more next month. And he'd be correct, right? But we hit a top, right? We hit that top. And now that's where Billy Bob, he got out at the top. And now we're coming back down. We're on the other side of the hill. And we're only down about 10%. But the seller, he kind of regrets not selling when Billy Bob sold. Well, look, everybody could not get out at the top. It's impossible, right? You have all this equity built up in your house. Now, okay, Billy Bob made it out. He got his equity. But now if everybody sold at that time, well, the equity would just go away. You see, houses, they trade on the margin, okay? So let's say the buyers go away and you have one person that's got to sell. Well, the price comes down until a buyer is hit, until the buyer is found. Now, that could be 20%, could be 30% down from where we are now before a buyer jumps in and takes that house off the marketplace. But let's say you get 5%, just 5% of the people want to sell. Maybe 5% of the people will be forced to sell. Let's say 5% of the people lose their job, right? And they can't afford their mortgage any longer. So they say, all right, I got to sell my house because I can't afford it. And 5% of the homes go onto the marketplace. Well, once again, you're at the margin. You're not going to get what Billy Bob got. Now, the first one that sells, he might get 10% below where Billy Bob was. But the next percentage that sells, they're going to get even less, maybe 20% below, and so on down the road until we're at that 50% reduction place. It doesn't require that everybody sells. If 5% of the people have to sell, believe me, that's more than enough to have a 50% drop in the marketplace. And look, if the buyers go away with all these layoffs coming, it takes a lot of people out of the buyer pool. It takes people forcing people onto the market that lose their job, but it also takes people out of the buyer pool. So you're adding homes coming on, but you're taking the buyers away. That's what happens in a recession. And believe me, we will see a recession. Now, will it come this year? I believe it will come towards the end of the year, absolutely. And this recession will pick up the speed of the prices that were dropping. See, everybody wants this to happen now. They want it to happen overnight. I mean, and I understand that. I get these, texts and emails and comment section, and everybody's saying, Mike, nothing's happening in my area. The prices aren't coming down. People are still buying these houses. And I get that. Even in my area, a couple of houses sold in my neighborhood recently, and they sold at relatively high prices. I mean, they were about 2.8 million. They got out around the 2.2, 2.3 million, which is really a lot of money. I mean, these houses, they're not worth that. These are 1,200 square foot houses. They're not worth that price, but people are still making it out, right? You're still getting some buyers coming in, and they're still getting out at a relatively high price. Not getting out at that 2.8, the Billy Bob price, but they're getting out at high numbers. And I'm sure in your neighborhoods, they're getting out at these high numbers for your neighborhood. People are still buying houses because the rates went from 7% down to 6%, and you got some stragglers. But here's what you're not getting. You're not getting multiple offers anymore. You're not getting bidding wars. These houses are not being bid up. They're just not. People are lucky to find a buyer, and they take it, and they move on. They take that price. They take the 10% off from the Billy Bob price, and they move on. But the seller's mentality now I'm a real estate broker, so I deal with the seller, and I see what they're thinking. They're saying, well, okay, Mike, I'm going to put my house on the market, but this is the lowest price I'm going to take. I'm only going to put it on if I get within 10% of what Billy Bob got. And that's all right. They think they dictate the price. They think that the real estate broker has something to do with the price. They think like, hey, I could just walk out there and tell the buyer, hey, look, come buy this. It's worth 2.8. Well, it's really worth 2.2. No, the seller doesn't dictate the price. The real estate broker doesn't dictate the price. It's where the market dictates the price. And the seller, they haven't realized this yet. They're standing firm on their price, right? And their houses are staying on the market a little bit longer. And we're starting to see some new properties come onto the marketplace, which is increasing inventory. Well, now, as the prices start to continue to decline, which I promise you they will. Now, we're at a delay right now. I get that. Some people are finding people to buy their house, and that's perfectly normal, and nothing goes straight down. I mean, it's not like the stock market could go straight down, but the real estate market is a slow grind. I understand that, and I understand in your neighborhood that prices are still at record highs and people are still buying them, but as prices start to come down, the seller, his mentality changes, right? He's going, okay, I'm at this 10% off sale where Billy Bob got, but since prices are coming down, okay, I'll reduce my house down to here, but this is my final offer, Mike. If it doesn't sell, I'm going to take the house off the market, and that's perfectly fine. So they got this new low where they're standing firm on. They're standing firm in their mind. But the prices still continue to drop, and their house isn't getting sold. They're not getting the bid because they're above the market. As the price drops, you got to get underneath the market. And the seller's mentality is just not there yet. And that's why the process is slow. Everybody wants to get the high price still. Well, as things start to move lower, there'll become this desperation in the marketplace. Now, we're nowhere close to that desperation yet. Nowhere close. I mean, the worst is yet to come. Believe me. This is just the start. We're down 10%. Nobody's that desperate yet. Wait till the desperation sets in. Now, you see, I'm an old guy. I've seen times in the Bay Area, where I could not sell. I had 3 properties at the time. I still remember, and I couldn't sell them no matter how far I was dropping the price. I was way under the market, but the buyers were just gone. The buyers went on strike. When there's no buyers, you can market 50% off, and you're still not going to get your property sold because there's just no buyers. Everybody's afraid. The fear sets in, right? The fear in the buyer sets in, but the panic in the seller sets in. Now, we're not at this stage yet, but that's when this stage does come into effect. That's when you'll know we're getting close to the bottom, but we're nowhere near that yet. Things are still selling in your neighborhood at record high prices, in my neighborhood at 10% off the record high prices. This isn't panic. This isn't desperation, but it will come, and it will come at a time when the seller will realize that they don't dictate the price. Market dictates the price, and if they want to get out with anything, they may have to take a 40 or 50% haircut. Now, there's places where, like Boise, Idaho, right? They were selling around 200,000, and then they shot up to 800,000. Okay, because of the pandemic, everybody left the office and they went back, wanted to live in different areas. All right, well, now they're called back into the office, so they got to sell those houses and come back into the office. They can hold on to those houses, but my point is, the people in Boise, I love Boise, no offense to them, but they don't make the money to support an $800,000 house. Their income is not at that level, and I don't think it's going to go to that level anytime soon. So these houses that are 800,000, they got to revert back to the mean, and they're all across the nation. The houses will revert back to the mean. They'll revert back to where the income level can afford the house, and this would be about 50% off from the high, about 40% off from where we are now, would revert back to the mean. Well, it's going to happen, and the worst is still to come. We haven't seen anything yet. A lot of you younger people that watch my channel, I love you guys, but you're going to get an opportunity here because the prices will drop and they won't be able to sell them. Yes, they'll be wanting you to come in and buy them, and maybe you will at the right price. There's going to be opportunities out there. I'll be the first to admit, not in 2023. I think they'll be coming in 2024, maybe even towards the end of 2024. I don't know how quickly this will play out, but when it starts to happen, it will start to happen at a rapid, frequent drop. Right now, we're at a very slow grind, maybe grinding down 1%. According to Doug Duncan, we're going to come down 3% this year. 3%, you're not even going to notice that. When you come down 30%, you're going to notice that, and that's very possible for the year. We'll see how it plays out. Now, before I go, that's it for the real estate. I do want to ask a question here, because another article I read is kind of disturbing to me. Now, it's called Universal Basic Income. I'll go over quick, but they're doing a test in the suburbs of Chicago with 3,000 people, right? They're giving them $500 a month, just universal basic income. I'm not sure what they're testing for, but there's a limit. If you make over $75,000 a year, you don't get the $500 a month. But they're going to do this for a year for people and see if it improves their lives. Now, you see, to me, this is just frustrating because in the United States, we're a right-to-work country, right? Everybody has the right to go out and work. Now, we're a free country, so you also have the right to sit home on your butt and watch TV. Well, should we really promote that? Should we promote people stay home, sit on their butt, watch TV, get a universal basic income check from the government, and just subside? I mean, is that what we want our nation to be? Do we want to support people that choose not to work? Now, I'm against it. This is an inflationary thing, number one, but who's paying for it? Well, it's you and me. It's the taxpayer. It's the taxpayers' money they're giving them. They're handing them out $500 a month, and they're doing, it's universal basic income. It's starting in Chicago, and they did a little test in Los Angeles also, but it's going to go nationwide if this continues. It's spreading, right? I mean, they're teaching our kids in high school now. They teach socialism to them. They don't teach capitalism. They want people to become socialists. And I'm so dead set against it. This is just my opinion. I got carried away. I probably shouldn't have even mentioned. Anyways, if you like this stuff, give me the thumbs up. Why not? It's Monday. We got a big week ahead. CPI number tomorrow comes in hot. Look for the market to pull back. I think the market's going to pull back anyways. Maybe we get one more up day, but I don't think we're going to take out that top, the recent top of a week ago. I think that's going to hold. I think we're going to come in. Just my take. I'm Tall Mike. Get out there, everybody. Have a great day. Bye-bye now.